Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's the first day of August 2023. It's a beautiful Tuesday down here in the Baltimore office. Yesterday, I sat down with an expert in a field that is a hot topic today. And we're going to talk about the news that came out from China that has to do with everything from semiconductors to military equipment. So we're going to bring him on in a minute. Before we do that, we're going to jump into the markets, talk about that, and give you an idea of what's going on around the world, all coming up right now on Making Money. Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions. He just gave them a dire warning. Mark says we're about to witness an historic stock market shakeup that can soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history. And he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash2023.com. He includes a name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of the beloved pet brand Qiu before it fell 45%. Tech company C Limited before it fell 66%. Furniture company Wayfair before it fell 76%. Social media favorite Snap before it fell 36%. And food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the FANG stock fell 35%. So you'll want to avoid the stock in this new report immediately. Again, simply go to rollingcrash2023.com for your free copy of this new report. Again, this is Matt McCall. Thanks for joining me. And my goodness, it's crazy. I never have any idea what day it is. I have no clue. Usually know if it's a Monday through Friday because I had stock markets open and those are my happy days. But as far as what day of the week, the podcasts keep me going because I know it's a Tuesday or Thursday, but sometimes we tape different days. So I never know. But what surprised me right now when I just looked down at my phone, it's the 1st of August. And that's pretty amazing to me, how quickly time has flown this year. It seems like just yesterday, it was September, October of 2022. Stocks were falling to yearly lows. It seemed as if it wasn't going to end at any time soon. It seemed as if a recession was imminent, if not already in a recession. And then suddenly things turned around and we've had one hell of a rally since then in the markets. And, looking at some charts here today, we had the Dow up 13 consecutive days and until last week that was broken. But now we've looking to get another 3-day winning streak if we close up today. Here's a look at the Dow right now. You can see just all the green on the screen on the right-hand side. And again, one down day, 13 up, one down, 3 consecutive right now. The Dow is up about 0.2%, about an hour into trading. The S&P 500 and the NASDAQ are both down in morning trades based off some earnings results that have come out. But again, we're down 0.25% on the S&P 500, trading very close to yearly highs. And honestly, folks, not too far away from breaking out to an all-time high. Again, let's put this in perspective as to where we were just last year at this time, and it continued to move lower throughout the summer into the fall before bottoming at that time. And speaking of the end of the summer and speaking of August, August is always kind of an odd month for the stock market. It's usually one of the worst months of the year. A lot of it has to do with the fact that August is really a big month of vacations, and especially for people in the Northeast, which is a lot of Wall Street. People go to what they call the shore in New Jersey or go out to Long Island, or maybe they go overseas to Europe. But the point is a lot of people step away from what they're doing, meaning there's less volume, less kind of trading going on. When there's less volume, there's less liquidity, which means could be an increase in volatility. So I will say, coming into August, today being the first day, I think the next 2 months, there's a good chance that we see a consolidation / pullback. The markets don't go straight up. If we end up today in the Dow, that's 16 of 17 days on the upside. Realistically, that just doesn't happen that often. The 13-day winning streak, tied for the second longest ever. The other time it happened was in 1987. The time before that, the 14-day winning streak, which is a record, I believe it was 1897, somewhere 1887. I think it's 1897, 1 year after the Dow Jones Industrial Average was created. So you can see this is pretty much a rarity. And again, keep in mind, stocks do not go straight up. I think things overall still look really darn good. You look at earnings, they've not been great. They've not been bad. They've been pretty darn good, okay/fine. And that's really all we needed because the expectations were for the earnings to be not very good. Then we take a look at what's going on with the Fed, with interest rates and inflation. We have two more inflation readings, two more jobs numbers before the Fed meets again. But I got to tell you, the more I'm thinking about what Jerome Powell, the Fed chairman, said last week, he couldn't come out and say we're not going to raise rates again at the next meeting, but which is in September. I really do not think they will, unless something dramatically changes, and unless CPI changes the trend it's in now, which is free fall, unless the unemployment numbers come out and show that the jobs market is suddenly super hot, which I don't think is going to happen. We probably see a pause. So the fact that the Fed likely pauses and probably pauses for this cycle being done, the fact that earnings have been pretty damn good, we're showing what's called better breadth, and that is meaning the internals of the market. We had the Magnificent Seven leading the market, the big names, the Apples, the Amazons, the Googles, et cetera, of the world. But you're starting to see some of the small stock come up. You're starting to see better numbers of new highs of companies outside the big seven. And here's a chart I'm going to show you real fast. This is the Russell 2000. It closed yesterday. It's down today about 0.2%, but it closed yesterday, the IWM, which tracks it, right near its high from February, not far from its August high of last year. So very close to nearly a 52-week high, breaking out. And that is a very good sign to see the smaller mid-cap companies starting to join this rally. So good news, in my opinion, of what's going on in markets. And again, if we have a pullback of 2, 3, 5, 6, 7% or so, that's okay. A slight pullback and a consolidation is what I call healthy. I've always called them healthy pullbacks for decades. I wrote about it in my book in 98. Not 98, sorry, 2008. Pullbacks are okay. It's part of the life. You can't go straight up in anything in life. So a pullback in the stock market's not a bad thing. So let's shift gears over. As I mentioned, what I want to really talk about in this show is what happened with China about a month ago, and then it was really came out and was definitive as of late last night, early this morning. And what happened was China came out and they're going to put some export controls onto two different metals. One's called gallium, and the other one's germanium. And they're going to go into effect as of today, August 1st. And really what's happening here is that, back in early July, they came out and they said that these two metals that are integral into the future of semiconductors, integral into some military applications, that they're going to put some restrictions on exports of 8 gallium, 6 germanium products. And they cited, of course, national security reasons. The reason I believe this happened, and I think most people agree with me, is because the U.S. put some restrictions on advanced semiconductor technology going to China. And we're in a precarious situation because China needs the advanced technology we have when it comes to semiconductor manufacturing. A big part of it's called lithography. And they need that from us, from the West. So if we cut that off, they say, okay, well, I'm going to cut off your gallium, germanium. Gallium is a more important one here. And we need that, meaning the West, the United States, Japan. We need that for the manufacturing of next generation semiconductors. So you're kind of stuck between a rock and a hard place here because we both need each other. And that's the key to China and U.S. relations. People a lot of times will say, China doesn't need us, or we don't need China. That's complete BS. We need each other. And that's why you see this tick for tack, this chess game going back and forth. So I'm not so concerned that this is going to set back the semiconductor manufacturing industry here in the West. That being said, it's something I want to talk about, something we need to keep an eye on. And the reason for that is, according to the U.S. Geological Survey, China produces 98% of the world's gallium. We've heard this story before. The amount of rare earth minerals that come from China, They refine almost 100%, high 90 percentages. Even if it's mined in, let's say, Australia, most of it is refined in China. The U.S. has approved two refining companies here to open refineries for rare earths. United States, MP Materials is one of them, symbol MP. Linus is the other. That's an Australian company. So they have for that. But the thing is, if gallium becomes an issue, and there's a shortage in the semiconductor industry, that's a major issue. And even so, there's other places around the world to get gallium, whether it be through Canada. There is an area here in Texas, but you can't just turn that on. I mean, this takes years. So it'd be a major issue. So we need to figure this out, or China and the U.S., I should say, need to figure this out. So really what China's worried about is the end use of it. And where is this going to go? Is this going to go into high-end advanced semiconductors for military operations or anywhere else? And I think that's what's going to happen. It doesn't mean people can't import gallium from China at this point. It means they need to go through a process to fill and obtain a license. And I think what China's trying to say is, okay, we'll give it to you, but you can't use it for military operations, that type of stuff. And again, I understand where they're coming from because it's a tit for tat with the United States. Reports out that they say the stockpiles that are outside of China could last about 2 to 3 months. So they can tap into that while the approval process is going through, which may take a month or two, is what the rumors are coming out that they're saying. That being said, because of this, there's going to be an export surplus that's going to be created within China because they're not exporting as much. All that being said, offer prices for gallium in Rotterdam, where it trades, apparently, they jumped 43% last week to $370 per kilogram. That of germanium rose 9.1% to $1,473 per kilogram over what the price was in June. And that's according to the China Non-Ferrous Metals Industry Association. And so this is, again, it is a big deal. Japan is the world's largest consumer of gallium. Over 40% of Japan's supplies are coming from scrap. So they have that going for them. The remaining 60% is imported, 70% comes from China. So about 40% of the gallium supplies that Japan gets from China. Very important. So even, the China's Ministry of Commerce sit down, they said the measures will neither limit the quality of these particular exports nor ban them altogether, as long as there's no problem in applications from exporters from the viewpoint of national security. I mean, they can say anything's a national security issue, but what they do is they call these GaN semiconductors, big G, little a, big N. That's gallium nitrate. That will be the replacement for silicon that is used in most semiconductors right now. It is cheaper, it is faster, it's more efficient, and it is the future of semiconductors. So again, I'm not telling people to freak out now. It's not that big of a deal here, but it's something we need to keep an eye on. And I thought it would be really good to get an expert in this field, which I brought on yesterday. We taped this Monday afternoon. Rick Qiu. He's a chief product officer for Mivium. It's a company here in the States that uses gallium in chip production. So I thought no better person to bring on to get the insights to what this really means with China putting some export restrictions on gallium and germanium, and really what it could mean for the future of semiconductors. So without further ado, let's bring on Rick Qiu. Rick, thank you so much for joining the show for the first time.
Thanks for having me, Matt.
So, Rick, tell me a little bit about what Mivium does, and then we can kind of segue from there into your ties to gallium and germanium and go from there.
Yeah, Mivium is a integrated semiconductor material science company. So we do all the research, engineering, manufacturing, and provide innovations all in-house. So we're able to solve some of the toughest challenges facing electronics semiconductor industry today. Semiconductors are in everything from automotive to AI. So these all these technologies have been based on a silicon substrate. The silicon platform is approaching its theoretical limit. So one of the things that we're doing is introducing a new platform, new substrate based off of gallium nitride.
So tell me, what exactly is gallium? I know it's been in the news recently because China putting some export restrictions on the two, gallium and germanium, and so you hear it, but most people, I'd say 99.9% of people in the world, never heard of it and have no idea what it is. So what is it, and why is the next generation of semiconductors likely to move from silicon to that?
So gallium is a metal. It's actually liquid at a little bit above room temperature. And it's an element, much like silicon is an element. But gallium in its raw material state isn't that useful for semiconductor. It's actually used in its raw state to replace mercury in a lot of thermometers because it's non-toxic,
Hmm.
non-harmful. You could essentially have it inside your body, though I'm not recommending anybody eat this stuff. But it is non-toxic to humans. However, when you combine gallium with nitrogen, you create a compound, right? Two elements create a compound, and that forms gallium nitride. Of course, it's a more complicated process. But this material, this compound, is a semiconductor with some very unique properties. It's incredibly hard. It has, a very high tolerance for heat, electromagnetic interference, radiation, and can handle a lot more power when used properly and faster speeds and performance over silicon. It's wider band gap. And I don't necessarily need to go into detail of the science behind it, but silicon has it's been pretty much the same material that we've used, mined out of the ground for the last 70 years, right? That's why you hear a lot of the news out there about Moore's law, is it coming to an end or not coming to an end, things like that. And it is because it's based on the physical properties reaching its limit. And gallium nitride has kind of given us a new roadmap to create all kinds of new devices that was previously thought to be impossible.
Wow. So that's obviously something that's going to be needed for, you mentioned a few trends out there, everything from electric vehicles to artificial intelligence. It could be used for, as more data is being created every day with AI for data centers, which is huge demand out there right now. And the big worry is the fact that about 97% of the world's supply of gallium is in China. And even more concerning for United States is they import 100% of gallium, germanium. 100% of it gets imported from outside of the country. So is there a concern going forward that there will be a shortage and prices will go up and hurt this trend that's taking place right now?
In the near term, we've already seen price increases of gallium. From a few years ago, you're talking about 20 cents a gram to maybe last year it was like 30 cents, and then as recently as just since this news broke, I think it's up to like 50 cents a gram, something in that range. I have to look, but those numbers are approximate, and but it's a short term issue, right? Long term, less concerning, but we'll know more of the details about the export controls, on August 1st, starting tomorrow. So once China releases all the required paperwork and things like that, we'll be more familiar with what they're asking for. It's not that it's impossible, but they're just making it harder. Now, China does refine and export, the vast majority, as you mentioned, of the gallium in the world, but they don't control the largest deposits or the reserves. That honor actually sits with Australia and South America. And you see a similar thing with lithium. All right, Australia, South America has the largest deposits, but China does all the refining, and we believe much of the reasons because it's the refining process. Before, when the prices were very low, it wasn't profitable to refine gallium anywhere else. So they really have a foothold on the whole refining process and getting us the high purity gallium that we would need. Lithium, if you follow lithium, you're going to start seeing a lot more refineries because there's a similar shortage across lithium, and now you're starting to see mining and refining of lithium here in the States. There are refiners that are going to be created because as the prices go up, it becomes more profitable, and the countries outside of China will want to get involved because it is highly profitable, and then the prices will come back down again.
So you said you're not concerned longer term. Just throwing out a what if scenario. What if China and the U.S. get into some type of tech trade war, if you will? Between the lithium refining you just referenced, the rare earth mineral refining that China dominates, and they basically China says, "Hey, listen, we're not exporting to any U.S. based companies or U.S. related companies, and because you have restrictions against us about selling us, high end semis back." So that could be a plausible situation, or am I just being too negative looking at that?
I don't think you're being too negative. I think you are kind of anticipating what might happen, right? And I think a lot of it is a tit for tat kind of thing. We here in the U.S. are withholding lithography technology, which is the part that actually etches the chips onto the wafer. They're withholding the raw materials, which is the base material. So it's like you kind of need both, right? You don't give us this, we can't make our stuff. We don't give you this, so you can't make that.
Yeah, I mean that's somebody's got to give, right? Or suddenly you're at a standstill. And you look at the growth of the semiconductor industry; it's been, lower left to upper right for decades, and it doesn't look like it's slowing down anytime soon. Again, with AI really taking off in every possible industry, we have electric vehicles demanding so much more. You have autonomous vehicles demanding so many more semiconductors in it, and as everything gets connected even more than it is in the world, we need them. So what is your outlook for the semiconductor industry? And is there a point in the near future where it will be gallium over silicon, or is that something that's going to take some more time?
Yeah, I think a lot of reports that I've been looking at predicts about 25% of silicon can be replaced by gallium nitride. And specifically, there's high-end devices that can only be done on gallium nitride, and it's already being done today, like 5G base stations, right? To get to the high frequency, high power applications, high speed, it's not the base stations require gallium nitride, GaN for short, GaN components. For automotives, you're going to see all the sensors, right? The first great killer application for GaN was the LiDAR, right? That happened about 10 years ago. So that was a killer app because it created high resolution 3D images using a semiconductor laser built on GaN. GaN is a photonic material, so it can convert energy to light, light to energy. It gave us really, truly high. If you look at the semiconductor lasers before GaN versus ones, it's like Atari versus PlayStation 5 kind of resolutions, right? And sensors, right, which is also going to be critical for AI. And from Mivium's perspective, AI really has like three pillars, and there's two that we would play in, right? The three pillars would be sensing, and recognition, and then decision making. So sensing is all your sensors, hearing, seeing, temperatures, pressures. You can have millions of sensors doing millions of different, a few simple things, but like lots of different data will be collected. But that data can't necessarily be stored locally on a device, on an edge device. So it's going to be transmitted, which requires a lot of bandwidth and throughput, which again requires GaN, and then goes into the data centers for the training. And the data centers, the way that AI training does, it consumes a lot of energy. And to save, power energy, you're going to need GaN to manage the power supplies. And we're not even talking about the chips yet. The recognition side, we kind of understand, is pattern recognition, large language processing, all that stuff. That's more of the software, right? So sensing is pure hardware predominantly, and then recognition will be software. And then there's a third pillar, which is the decision making. So that's where NVIDIA, AMD, Intel, and those guys play.
Yeah.
And that's something a little bit further down when you start getting GaN chips or photonic chips, which will take us to quantum computing. But that's a little bit further down.
Yeah, just everybody who's listening at home and watching, GaN that Rick's referring to is gallium nitride. And that's what he talked about a little bit earlier when he explained gallium. Before I let you go, Rick, do you have any numbers or ideas of how big the GaN market will be? And will it be the staple, and that will be the semiconductor of choice, basically, in the next decade or so.
Yeah, in the next decade, they're already predicting something around like 20 to 30% CAGR. But a lot of this is still speculative because there's so many devices that we're not exploring yet, and this is done before OpenAI and things like that came out.
Mm-hmm.
AI has been really a big boom for the entire semiconductor industry, right? Because the amount of load and power requirements and things like that, and actually brought it to the forefront, and people realize, oh, we're going to need a lot more computing power and a lot faster than what traditional chips can do. Before AI, I think the prediction from most analysts was somewhere around $10 to $20 billion, and that's just based on 5G, right? And then now with what you're seeing with full autonomous driving, it's not going to be achievable without GaN. Tesla is kind of like set the standard on what full autonomous driving is. If you look at what that level 5 is, it requires a lot of sensors, a lot of AI, a lot of training. And then now with AI, I mean, the stuff is just going through the roof. So we have to reassess, but it'll probably be in the hundreds of billions. I would imagine, within the next 5 to 10 years. That's just based on things that we do know. Beyond that, again, I would be speculating, because there's a lot of things that we're not even calculating. For example, the Apple recently also announced transition from organic OLED displays to micro LEDs, right? Which is based on GaN. Solid state LEDs is going to be the thing. We know for sure now that organic is going to become inorganic LEDs, solid state LEDs, micro LEDs, and then the form factor is going to be all over the place. They're going to start with the watch, and they're going to do iPhones, and then sky's the limit at that point. So that's why I'm being conservative, but I'm still saying I'm speculating.
Yeah. Yeah, I'd say if those are conservative numbers, they're still pretty darn big. I'll tell you, the upside potential here. So I really appreciate you coming on our show, sharing your expertise, because this is a topic that there's not many investors looking at right now. And we always want to be first here at making money and bring on the experts that can share. And you did a great job of breaking down what can be a very difficult to understand topic for the viewers out there. So Rick, Qiu, thank you so much for joining us.
Thanks, Matt. Anytime.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.